Is the yield curve un-inverting? Plus, what popular top-of-mind question have you sent our way recently? Hello, members, super savers, and bond course fans. I hope you're healthy and well, and welcome back to our weekly update. Treasury yields fell across the board this past week to some of the lowest levels since October on expectations of another rate cut at the upcoming FOMC meeting on December 17th and 18th. So, with that in mind, here are the three topics that we'll be covering in today's video. 1. What are puttable bonds, and should you buy them? This is a question that some of you have been asking us more recently as you move beyond Treasuries. So, let's walk through a real-life example that was emailed to us this past week. 2. Which Treasuries fell the most this past week? And 3. What are the expectations for the upcoming week's 3, 10, and 30-year Treasury auctions? Plus, what are the highest yielding opportunities for new issue agencies, corporates, and brokered CDs right now? As usual, here's our front of video disclaimer. For a detailed disclaimer, please refer to the end of this video. Let's dive in now, folks. What are puttable bonds, and should you buy them? As many of you already know from the new issue agency and corporate bond opportunities that we share with you on this channel, callable bonds are a type of bond that the bond issuer can redeem or buy back early from the bondholder before the maturity date. Puttable bonds follow the same principle, just the other way around, so to speak. They are a type of bond that the bondholder can redeem early, sell back early to the bond issuer before the maturity date, which means that the put option allows the bondholder under certain circumstances to cash out the bond before maturity directly with the issuer without having to sell it on the secondary market. Let's go to E-Trade's platform to get an example of a puttable bond. Here's the one from pharmaceutical giant Merck & Co. that YouTube member and bond course fan P. Douglas sent us recently. You can see from the description already that it's not only callable, it's also puttable. If we click on it, we get to this page with more details. Let's scroll down to redemption features, and we can see that the next put date is December 21st, 2025. Let's scroll down further and click on View Schedule, and we can see that this bond was first puttable on December 21st, 2010 at $99 per $100 par value. This means that on December 21st, 2010, a holder of this bond could have sold the bond back to Merck at $99 per $100 par value. The next relevant put date at this point in time is December 21st, 2025, so about a year from the time of this taping. On December 21st, 2025, a bondholder of this bond can sell the bond back to Merck at $100, so at par. This is not a continuously puttable bond. It is only puttable on these predetermined dates specifically listed here, at these preset prices here. Whereas callable bonds typically benefit the bond issuer and pay a premium to the bondholder, puttable bonds generally benefit the bondholder, and therefore, puttable bonds tend to pay a bit less to the bondholder. As I often say, no risk, no reward. Meaning that to answer the question of whether you should buy puttable bonds, you actually first have to answer this question. Are you willing to accept a lower coupon for the option of being able to redeem or sell the bond back to the bond issuer before maturity at preset prices on predetermined dates or over a predetermined period? If your answer is yes, then puttable bonds may be something to consider. Otherwise, you may want to scratch puttable bonds off your list of potential investments. It's also important to note that none of the new issues that we've seen recently are puttable. Most of the puttable bonds are found on the secondary market. And indeed, the puttable bond in our example is already a bit older as well. It was first issued in 2000 with a maturity date of December 2040. So that was the put option on this Merck bond. But as you can see from this description, there are a few other features that make this Merck bond a bit more complex than Treasuries and the other types of bonds that we've talked about up to this point. Bond Masters, folks, will be diving deeper into these other features in our Bond Masters live course session this weekend on Sunday, December 8th at 5 p.m. Eastern Time, 2 p.m. Pacific Time. The upcoming week's 3, 10, and 30-year Treasury auctions are also on the agenda for the live course session. For today's update, though, let's move on now to the next section of this video and see how Treasury yields fared this past week. Which Treasuries fell the most this past week? As we so often do at the end of the week, let's compare Treasury yields from this past Friday versus the previous week. Here we have all the maturities that the Treasury issues at auction. Here's where yields stood this past Friday, and here's where yields stood at the end of the previous week. As I mentioned at the beginning of this video, Treasury yields fell across the board this past week to some of the lowest levels since October on expectations of another rate cut at the upcoming FOMC meeting on December 17th and 18th. The biggest drops were seen in the 1-month and 2-month, both of which were down by 19 basis points. The medium and longer dated Treasuries saw much smaller declines. Everything 5-year and above was down no more than 3 basis points. Now, let's take a look at Treasury yields from this past Friday versus the beginning of this year. This row shows where rates ended this past Friday. This row shows where rates were on January 2nd. And this row shows the increase or decrease in rates since the beginning of this year to the time of this taping. Increases in rates are shown in black, and decreases in rates are shown in red. Treasury yields across all maturities 2-year and below are noticeably lower than where they were at the start of the year. The 2-month and the 3-month are now both down more than 100 basis points. The 3-year was also not able to hold its recent gains and is once again lower than where it started the year. Whether this downward slide will continue or reverse course in the final weeks of the year remains to be seen. Everything 5-year and longer is still above where it was on January 2nd of this year, although some more of the gains were given back last week. The yield curve remained negative, but narrowed quite a bit last week on the extreme ends. The negative difference between the 1-month versus the 30-year now stands at only 23 basis points versus 40 basis points last week, quite a bit less than the 147 basis point difference at the beginning of the year. We'll keep watching the yield curve and how it may continue to uninvert at the extreme ends here for you at Diamond NestEgg. And the widely used comparison of the 2-year versus the 10-year Treasury, which has been in positive territory for a bit now, has remained there, with the positive difference at 5 basis points this past week, the same as a week ago. You can find more details on these rates for any day of the week that the bond market is open on the Treasury's daily Treasury par yield curve rates page. All sources are linked below in the first pinned comment. Do keep in mind that this overview gives you a general feeling for where rates currently stand along the maturity spectrum. The yields that you may get when you buy at a specific auction or from a specific broker or when you sell will likely differ a little bit from what's shown here. Now that we've covered Treasury yields from this past week, let's move on to the next section of this video, especially for those of you who are interested in agencies, corporates, and brokerage CDs as well. What are the expectations for the upcoming week's 3, 10, and 30-year Treasury auctions? Plus, what are the highest yielding opportunities for new issue agencies, corporates, and brokerage CDs right now? Here we are at Treasury Direct's upcoming auctions page. If we scroll down, we can see that all the weekly T-bill and CMB auctions are happening as usual. And if we scroll down further, we can see the 3-year T-note, the 10-year T-note, and the 30-year T-bond will be auctioned off as well this upcoming week. The 10-year T-note and the 30-year T-bond are reopening auctions, so we already know the coupon on those. At the time of this taping, here's what the coupon and the expected yield are for the 3-year T-note auction on Fidelity's platform. And here's what the coupon and the expected yield are for the 10-year T-note auction. And here's what the coupon and the expected yield are for the 30-year T-bond auction. Do keep in mind that all of these numbers can and usually do change all the way up to the time of the auction. So that was Treasuries. For those of you who may be interested in other types of bonds and CDs for a bit of a higher yield potentially, here's where the highest yielding new issue agency bonds stand at the time of this taping, with the highest yielding one at 5.74% from Federal Farm Credit Banks, with a first call date in December 2025. Here's the CUSIP for those of you who may be interested. For corporate bonds, there's a fairly long list again this week. Here's where the highest yielding new issues stand at the moment. The highest yielding one is from Jefferies Financial Group at 6.05%, with a first call date in December 2027. Here's the CUSIP for those of you who may be interested. For brokered CDs, unfortunately, the yields remain as unexciting as they have been over the past few months. The highest yielding one is from Sullivan Bank at 4.6%, with a first call date in March 2025. So, as I mentioned in our last weekly update, we already have some exciting videos and plans that we will be sharing with you in the new year. As our channel has grown, we have gotten feedback on a wider range of topics that some of you want covered here. So, for those of you who may be interested, I've linked this Google form below again for you to give us even more detailed feedback on what you want us to focus on in 2025. The survey is completely anonymous, unless you personally wish to provide your email for us to follow up. While I cannot promise that we will be able to implement every suggestion you give us, do know that we will do our best to incorporate as many ideas and suggestions as possible. And I thank everyone in advance who will be completing the survey and contributing to all that we do here at Diamond NestEgg in 2025 and beyond for you. And of course, if you've already completed the survey, there's no need to fill it out again. All right, members, super savers, and bond course fans, I hope you enjoyed this video and learned something new. And as always, if you want to really get up to speed on bond investing and building out your bond portfolio while rates are still quite attractive, then check out this video here on our 2024 bond courses. Or come join our live sessions this month. Our next Bond Masters Live is happening this weekend, Sunday, December 8th at 5 p.m. Eastern Time, 2 p.m. Pacific Time. And our next YouTube member live will be on Thursday, December 19th at 5 p.m. Eastern Time, 2 p.m. Pacific Time. We'll be diving deeper into this month's upcoming Treasury auctions and other new issue bond offerings. I've also linked all the details on our bond courses and YouTube Super Saver membership below this video for your convenience. Good luck to everyone who's planning on picking up some bonds and or CDs this coming week. And see you again very soon with more brand new wealth building content for your financial journey.